We have already seen our previous classes and discusses about the non-profit organization. In our previous classes, we have already seen that how we will treat our typical income in this non-profit organization. That means we have already discussed some income, what is admission fee, grant, subscription, and how we will adjust this income when there would be the adjustment. In our last class, we have discussed about the subscription, how will adjustment will be done in subscription when there is a outstanding subscription, advance subscription, or outstanding expenses or advance expenses. Okay. Now today I will tell a story to understand a topic. What is the story? Suppose one day you woke up in the morning and saw in your pocket there is a 2 chocolate, and during the day you also bought 4 chocolate more, but at the night you saw that there is 1 chocolate only. So now my question for you, how many chocolate have you eaten during the day? So this is very simple. We have already eaten the 5 chocolates. So this is what this is. This is the material consumed. How many chocolate you consume during the day. So today our topic is material consumed. Or consumable material. Consume material. In NPO, non-profit organization, you know there are some medicine or stationery is needed. So there is some stock also, and we have to calculate how the medicine, how many medicine we consume during the day or during the year, how many stationery and how much stationery you consume, that means paper and all other things you needed to going on or make you provided to you going on or this organization for you. Okay. So there is need some stationery, some medicine, all these things, and how we will do accounting for that. This is our topic today, consumable material. So when I have told you the story, in your mind you have already calculated what the consumable thing. How do you calculate it? You have opened a stock account. So we will do that in our accounting way. How this? Just open a stock account. This is particulars. This is amount rupees. This is also particulars. This is also amount rupees. This is a stock account. Now I have told you in beginning there is 2 chocolates. So opening balance, 2 balance BD. 2 chocolates means there is some value of the chocolates, and we are assuming the value of chocolate is 10 rupees each. Okay, so there is 2 chocolate means 20 rupees. Your cost is 20. Then during the day you purchased 4 chocolate again. Okay, so to purchase how many chocolate? 4. That means 40. If each of them is price is 10, then 4 chocolate price or cost will be 40. So total cost of material, not cost of material consumed. Cost of material consumed. Cost of consumed material or material consumed. Okay. Cost of consumed material or cost of material consumed. So this is the cost of material consumed. Cost of material, sorry. That is 60. And at the end of the day, in our story, there is 1 chocolate left. That means buy balance CD. This is the balance in the end of the day. This is 1 chocolate, rupees 10. So the balancing figure by cost CO material consumed. By cost of material consumed. What will be the cost of material consumed? Is a 5 chocolate we have consumed, and the rupees of each 10. So this is 50. Okay. So how can you get the cost of material consumed? If you depicted in your, this is means opening stock. Opening stock plus purchase minus closing stock. That's depicted in our accounting way. Okay, and we'll do or we'll understand as we are the accounting student, so we'll understand in the debit credit manner in accounting way how we'll consume the material and what is the cost of consumed material. So here is cost of consumed material is 50. You can reveal this by balancing figure also, by balancing figure. Okay, so it is easily come. This is not the cost of material consumed, this is the cost of material, not cost of material consumed. This is the cost of material consumed. You have consumed 5 chocolates, so what is the price or cost of 5 chocolate is 50. And last there is a 1 chocolate still left, so this is 10. Now how will adjust and where this will go, we will see. So this is your opening balance of stock. We know stock is an asset. So opening balance of stock, this is go where? This is going to balance sheet, opening balance sheet and asset. Okay. What is closing balance? This is a closing balance of stock. So this is going to balance sheet. This is closing balance sheet in asset side. In purchase, the purchase actually we have already taken this effect in our receive and payment account. How we purchase? Because there we make a payment for purchase and there is nothing is said in this example. So we'll assume this is a cash purchase. So already this cash effect have taken in your receive and payment account. So this is not going anywhere. Or what is cost of material consumed? Where it will go? It will be go in the income and expenditure debit, means plus expenses. So this is the actually the expenses of expenditure we have made in this year. We have though we have taken example of 1 day or story of 1 day, actually this is the 1 year example. Okay, in 1 year we have consumed this material chocolate in rupees 50, and this will be go to income and expenditure debit side, and we add this debit side. Okay, have you understood this? I think so. Now go to a advanced problem. If there is no purchase is set, how many chocolate you have purchased? The same story will be there. We understand the how will reveal our purchase amount. In our story, in stock account, we have already made what we see in stock account. Particulars rupees, particulars rupees, and there is also another account, this is creditors account. This is particulars rupees, particulars rupees. In creditor, in stock account, in our story we have seen our opening balance is 20 because there was 2 chocolate, and closing balance is 10. In creditors means stock is our asset and creditors is our liability. We take credit from the creditors and we have to pay money in later. So creditors is our liabilities, and when there is a liability, we know the balance of liability will come to in credit side. So the opening balance will be in credit side by balance BD. Suppose this is 25, and end of the day there is a closing balance also. Suppose closing balance is 20. Now we do not know in this example how many chocolate we have purchased during the day, but one thing they said in the story said that we make a payment to the creditors rupees 100. We make a payment to the creditors 100. So make a payment. We are assuming here we make a payment through cash. So to cash account. Suppose we make a payment rupees 100. But you will be said the opening balance is 25, we already paid 100, so there is still 20 rupees left. So we have to again pay 20 rupees in the end of the day or end of the year. We again pay rupees 20. How can this possible? This is possible because in the meantime we purchased some goods from our creditors. What would be the purchase? So this is the total balance 120. We have paid already. 100 and balance is 20, so total is 120. And the balancing figure will be the purchase. What will be the figure? 105. $120. Sorry. This balance is 20. Opening balance is 20. We are assuming, and closing balance is 25. So total is 125. So it will be the the balancing figure will be the purchase amount, because your opening balance is 20 and closing balance still is 25, though we paid 100 to our suppliers or creditors. Okay, so what will be the purchase amount? Purchase amount would be the 105. Now it is correct. Okay, so this purchase amount, from there, this purchase amount, so this is a credit purchase, this purchase amount come to there to purchase. $105. So we have get the this. Now the problem is same as we shown before. We have got the what is the purchase amount from where? From the creditors. If there is a creditors, so we can get the purchase, though the purchase is not set to your example or in your story. Okay. So in purchase, what would be the NG? Purchase account debit to creditors, and this purchase is transferred to stock account. So we get the purchase 105. What will be the balance? Then total cost of material 125. 125. Then what would be the value of cost of material consumed? So by cost of material consumed, what will be the value? $115 we have consumed, though we have payment to creditors or paid to creditors rupees 100, but we consume the goods whose value or whose cost is 115. Okay, now I hope you are understand. Okay, what is the thing? So this is the way, this is the best way you should understand the getting the things of cost of material consumed. Now we'll take an example. And see how the problem will be solved. Suppose there is a problem, you have to reveal what is the cost of material consumed. So write down this example on the basis of information given below calculate the amount of stationery to be debited to the income and expenditure account of a club for the year ended 2017. For the year ended 31st March 2017. 31st March 2017. Okay. What are the information? Stock of stationery. Stock of stationery. April 1, 2019. March 31, 2020. What is the value? 8,000 and this is 6,000. All are measured in rupee. Creditors for stationery. Creditors for stationery. In April 1, the value is creditors is 9,000, balance. Actually, these are the balances. These are the balances. Okay. The opening balance of stock, closing balance of stock, opening balance of creditor, and closing balance of creditors. Now, there is also one information is given. Stationery purchased during the year ended 31/3/2017 rupees 47,000. Now you have to, on the basis of this information, you have to calculate the stationery to be debited. What the stationery cost of stationery consumed in the year 1920. So first of all, we are already know we have to open a stock account. Stationery stock. Particulars, amount rupees, particulars, amount rupees. So what is the opening balance of stock? As stock is our asset, opening balance of stock should be debited. Opening balance of stock is 8,000. So to balance BD, this is 8,000. And what is the closing balance? Closing balance is 6,000. So by balance CD, this is 6,000. So already this information is given in your example. So what is the opening balance and what is the closing balance of stock? And there is also one information is given, this is how many stationery purchased during the year. So this is purchase is already given. Do you need to open a creditor's account? No, because this is only given in your example to confuse you. Don't confuse, because purchased during the year already given, not the payment. What is the purchase amount already given, and in there we are assuming the purchase is made in credit, because creditors is given. There is no cash. Unless or until it is clearly say there is a cash purchase, we do not assume this is a cash purchase. Okay, it is always a credit purchase. So we can write down here to purchase of stationery. What is the amount? 47,000. What is the amount? 47,000. So what will be the total? Total cost of material 55,000. In credit side also 55,000. Now we have to reveal what is the how much stationery we are consumed during the year. So in your credit side, by income and expenditure account, that is cost of material consumed what would be the amount? The amount would be the 49,000. So this is the value of cost of material consumed, and we will show this in income and expenditure account debit side. Okay. And we already seen the opening balance of stock, what's your balance sheet, asset side of opening balance. Closing balance of stock we have shown in the closing balance sheet, asset side. Okay, and purchase of stationery, as we are told earlier also, this is the actually take effect in the credits account and also receive and payment account. So this is not going anywhere now in our income and expenditure account, because we will do two account only. One is income and expenditure account and one is balance sheet. Balance sheet is a statement. Okay, this is our final account for NPO, and receive and payment account already given, generally given to your problem or in your examination. So we have to make two things. One is income and expenditure account and one is balance sheet. This is two balance sheet in non-profit organization, in the case of non-profit organization. And why these are two balance sheet, we have already discussed in our previous classes. Because two balance sheet is needed, because opening balance you have to show opening stock, you have to show the opening balance sheet, and closing stock you have to show in your closing balance sheet. Okay, and you have to when we will do the balance sheet in details, we will show again why there is two balance sheet will be needed. So I hope have you understood this example. So going on the further advanced example also, we will take an advanced example and make you understand how the things will be happen. So next, we are taking another example. This is an advanced problem. Now write down, prepare cost of material consumed, prepare cost of material consumed and show it in income and expenditure account and balance sheet also. So what are they are given stocks of force material. Sometimes in your club we buy some force material to make a team. This is cricket team, football team, and we participate in different tournament also. Okay, so that's what we needed, some force material. So what is the stock of force material? In suppose 31st March 2016, this is 2200. It is 2200 and 31st March 2017, because we have to prepare cost of material consumed in the year ended 2017. Income and expenditure account, prepare cost of material consumed and show in income and expenditure account, and balance sheet also year ended 31st March 2007. So the opening balance is 2200 and closing balance is 5800. What is the creditor? Balance of creditors. Creditors of creditors for force material. What is the value? 7800 and 9200. Advance to supplier. This is a new thing. Advance to supplier for force material. What is the amount? 15,000 in opening and 25,000 in closing. Payment, there is another information is given. Payment to suppliers. For the force material during the year. Was rupees 1,20,000. 1,20,000. And there is clearly said there is no cash purchase made. There is no cash purchase made. Okay. So we have to open. There is no purchase is set. What is the purchase amount? Not set in this problem. Okay, this said payment to suppliers. That means creditors. Payment to supplier for the porous metal during the year 1,20,000. So we are sure we have to open both of the accounts, stock account also and creditor accounts also. So just open the stock account first. Stock of porous material. What is the opening balance? As stock is asset, opening balance should be debited. To balance BD 2,200. Buy balance CD 5,800. I forget, there is a particulars rupees, particulars rupees. Okay, now to balance CD, to balance BD 2,200. This information is already given in our problem. Now we have to open again a creditors account also. Creditors account. So this is a particulars. Amount rupees, particulars, amount rupees. So creditors is our liability. This is our liabilities. So there is a credit balance. So what is the opening credit balance for creditors? Buy balance BD 7,800. And what is the closing balance? To balance CD 9,200. 9,200. So there is another thing, advance to supplier for porous material. This is new for you. Advance to supplier for porous material. What is that? Sometime what is happen when you purchase some big or large amount of material, your supplier can ask you to make an advance. Okay, so this advance is what of this advance, why they actually call or take an advance from you, because when you order a large amount to supplier, there is thing that they always apprehension that if they will purchase the large amount of thing, if you not take this purchase or material, then what there will be loss for them. So that's why they take a token money or down payment for these big purchases, and this is the advance to supplier. But for your point of view, what is that? You advance to somebody, though there is a creditors. Suppliers mean they are the creditors, but you have to make an advance to them. Then if what is that make to advance to them, that means anytime stock will not come to you to make the payment to advance. Anytime you go and ask to them to give back my money, you have still not given to, still not, though I still not receive my stock, so you just give money back to me. So when there is a receivable, or you from you get the money or money back, so this will be your asset. So advance supplier for force material is your assets. Okay. So assets, as you know, the asset balance, what would be the asset balance? Asset balance is always debited to balance BD. What is the amount? 15,000, and by balance CD. What is the amount? 25,000. Okay. Have you understood what is advance to supplier for force material? This is actually asset for you, though this is a supplier creditors, but you have make a payment in advance, so it is asset for you because you will make an advance payment. So anytime you can return back the money, or you can ask for the money. So there is also said payment to supplier for force material. So these creditors or suppliers, we make a payment. Payment, what is the payment made? Rupees 1,20,000. So payment made rupees 1,20,000. And from where now we will add this. What would be the amount? Amount would be the 1,44,000. 1,44,200. 1,44,200. Here also 1,44,200. So balancing figure, this is a purchase of force material. What will be the amount of purchase? 1,11,400. 1,11,400. So this purchase will come to, we know here. So to purchase 1,11,400. What will be the total? What will be the total amount? 1,13,600. 1,13,600. And by income and expenditure account, this is cost of material consumed. What will be the amount? The cost of material consumed 1,07,800. So here we can also see this is how can we reveal the cost of material consumed, because this cost of material consumed going to income and expenditure account. Okay. So this is an advanced problem. Hope you have understood the problem how we can solve. And this way, this is the right way or error-free way you can make any problem, solve the problem very easily, not the plus minus process. Do not do. I am not great believer of plus minus process. This is the ledger process or debited credit account process is the best for cost of material consumed. Hope you have enjoyed the session, and thank you.